JP Morgan says that 38,000 US dollars is a fair price for Bitcoin and that they expect more upside for the OG of crypto world and overall crypto markets. The bank also says it now prefers crypto over real estate as an alternative asset. Could this be the impetus for traditional investors to dabble in crypto? Let's find out from Benjamin Stani, Business Development and Sales Director at Matrixport. Great to have you with us again, Benjamin.
Hey, thanks for having me back.
Now, one of the biggest traditional banks, or at least its CEO, seem to have changed their mind about the value of crypto markets and Bitcoin in particular. What did you make of the bank's note saying the current sell-off has not stopped venture caps from coming in?
I believe what they're talking about here is that despite the Luna fallout, we've not seen a dry up in liquidity. And that's true. In fact, we've had some very high profile large raisings the last couple of days. A16Z, their 4.5 billion Web3 fund. Standard Crypto did a 5.5 billion, just to name a few. And even on the project side, we saw Starkware did a Series D at 8 billion. I think it's a bit too quick though to draw that conclusion yet. Of course, I think things are very different now than during the last cycle. And I mean, we're just discussing an opinion piece here of a major Wall Street bank. That was unthinkable in 2017. But I want to warn that these fundraisings, they tend to have a lead time of a few weeks, if not months sometimes. And so whatever was announced over the last couple of days, I would guess the majority of the heavy lifting had already been done pre-Luna. So therefore, I think we will probably need a few more weeks before we can actually gauge the impact on private side valuations. But I'm convinced that we won't see a repeat of the 2018-19 crypto winter, because there's one significant difference here. We're talking about adoption, and we're much further down that road, and so far it's been only one wave stream there.
Now, JP Morgan's call of the 38,000 level on Bitcoin as fair value means a significant upside from current levels. They also said that crypto is a preferred alternative asset given the selling seen in it relative to other instruments like realty or PE. Could this sort of target bring big institutional and retail money into crypto?
Yeah, it certainly had a number that will get people's attention. And I think it's interesting that they're putting Bitcoin in reference to other asset classes, because that's exactly how we'd look at it in the short term as well. Of course, the target price depends on your investment horizon, and we all know in the long run you're always bullish Bitcoin. But in order for large asset allocators to be interested in the space, you need to give them a relative valuation pitch, because these money managers work on a quarterly or annual performance targets, and they're trying to either beat the benchmark or generate absolute returns. So if they see good risk-adjusted returns, they will come, just like they have done over the past couple of months. You can see it from the number of clients that we've been onboarding and the amount of TradFi institutions that are setting up crypto arms and businesses.
Interestingly, JP Morgan seems to be going full throttle on blockchain tech. They recently tried out their private chain for collateral settlement. Will banks be the bridge to bring institutional investors to DeFi?
I think the answer here is also depending on your time horizon. We're seeing banks pushing aggressively into crypto, actually mostly starting from their private banking side, because they've seen demand from their end clients that they just simply couldn't ignore. Likely the first access product will come from TradFi banks, because they have an existing trust relationship with these clients. However, banks are very slow and bound by a lot of legacy overheads. So it's not surprising that many TradFi institutions are embracing crypto via setting up new departments or even new vehicles. And crypto financial institutions like ourselves by nature are more agile, because we are closer to the pulse of the market, so we can quicker react to changes and adjusting our product offering, which at least for the time being, DeFi feels like it's very dynamic still. So as market matures, maybe banks will become more important, but I think for the time being, banks haven't even solved some of the most important questions around DeFi. Foremost the custody side, and I fear as long as our industry keeps changing at the pace it does, TradFi bankers will having a hard time to catching up on innovation.
Well, the times they are changing, and keeping up with DeFi innovation would be the key. Thanks as always, Benjamin.
Thank you for having me.